What's going on, everybody? Welcome back to the channel. Today we're going to be looking at Pitney Bowes Inc. That is ticker symbol PBI. This one's been on my radar for 5+ years. It's always one that I like to go back and look at because it is so perfectly charted. It hit my price target back in the day. I hope I have the chart saved. Um, so we're going to look at advanced charting to see some support and resistance is. Potential moves where we can expect the stock. We're going to run our projected price calculation, and we're going to see what institutions and hedge funds are doing. Just looking at the stock right now, and to save everybody some time, I think we're going to see this one come down, but I do think it could be a 10x stock, so that could be of interest to you. Let's go ahead and jump on in. So the stock is worth $7.71 as of this recording. This video is coming out right before the new year. So I do expect the stock to be potentially lower by then. We're trading in a descending triangle. We can see the stock tried to break through right here, and it did. However, we did not get an explosion of volume through this long-term resistance. And this goes all the way back to 2014. The stock has never broken above and closed above this line except for last month, but we can see it actually already starting to deteriorate below this what was resistance now is support. So um, I'm seeing some deterioration, and the reason why I'm calling it deterioration so early is because last month, November, there was 42 million shares traded. December, we're already halfway through. We're seeing 16 million shares traded. So we're seeing weakness. We're not seeing buyers jump in. We're not seeing a euphoric move here, in my opinion. The month is still early, but I just don't think we're going to see it yet. Once we get into this area of arbitrage, I think that's when we see our potential opportunity to jump on this one. So looking at RSI, we can see it got really hot, but it got really hot right here. It got overbought, and now it's actually heading down. You can see that there. Our momentum looks like it has peaked. It has peaked, and it is potentially coming back down now. Our money flow is actually, you can see it tick down right here. And our relative momentum indicator is getting to this very hot area, but it's kind of stagnating right here. We don't see it continuing in this upward area. So I'm seeing some deterioration in the stock price, which is not a bad thing. Stocks go through cycles. Potential cup within a cup, a potential cup and handle within a cup and handle. 1 second. All right. um, so just seeing a lot of deterioration at the moment. Looking here, I do see some reddish flags. They're not profitable. We're not seeing their debt here, so that's kind of concerning because that usually means it's pretty high. Year-over-year revenues are dwindling down. 2021 was their all-time high, and it's just kind of been coasting down ever since. EPS next year, they're forecasting 179%. Sales over the past 5 years, not even 1%. So although it is positive, during the COVID area, they eked out just a little bit. Gross margin 35%, that is fantastico. But I do just see some headwinds here. They offer a dividend. I'm not a fan of companies that don't have a quick ratio of 1. I don't like them offering a dividend. They need to be putting that money towards debt and cash. But let's go ahead and open up our projected stock price calculation. So market cap is 1,360,000,000. Income, they are not profitable, negative 171,210,000. And they do sales of 2,990,000,000. Okay, not bad. Again, not the most attractive financial sheet here. The reason why I'm showing you guys this company again is it's been living rent-free in my head for the past several years, just waiting to get back to an area of arbitrage. Wanted to share this with you because I think the last time I reviewed this, I don't think I've ever reviewed this maybe. So just wanted to get this one out there and also refresh my memory because I do this for myself and this is my passion and I'm just sharing with you guys. So don't copy me. This is strictly entertainment only. Okay. They have $575 million in cash. 575 million, 510,000. Good for them. Debt. Two. That just takes all the air out of the sails. 2 billion, 170 million, 110,000. Absolutely devastating. Total liabilities 4.1 billion, total assets 3.6 billion. So when liabilities exceed assets, you know what they say. It starts with a B and ends with bankruptcy. Yeah. So they've been in trouble since Q2 2023. When I say trouble, where liabilities exceed assets. So I am very shocked that there is not shorts piling into this. Quick ratio has not been at 1 in a long time. They do have cash. I don't know why. I mean, they're offering a dividend. I wish they would not. I wish they would stop that dividend. They might stop it, honestly. Back to our calculation. It's gonna be ugly. Um, there's 181,340,000 shares outstanding. This is a $14 stock. Did I see that right? Yeah, $14 stock. Analysts have it at $15. I highly disagree with this. I highly disagree with this. Um, and that is because sales are just crescendoing downwards. Not good. EPS is kind of all over the place. We see positive, negative, positive, positive, negative, and these negatives are not good. Let's just see where we're at. 2023 negative 2.20 going back here. 2023. Yeah, so 2024 we're going to see negative 0.98. So it will be an improvement. However, not positive and they're not profitable. So just this one's just one huge eye roll for me. Paul Evans bought $226,000 worth. Not yet. I don't think I think this company is aware of where the stock is going. I think we see this get back down to 380 in the next 2 years. And I think that's fine. Let's go ahead and look at some advanced. Well, before we look at our advanced charting, institutions own 60%. I would venture to say maybe lower now. Old data 60.28, new data 70.35. Seriously? Ooh, I don't like this because year over year revenues are declining. They're paying a dividend. They need to work on their debt. Their liabilities exceed assets. This is a kind of a red flag for me. Vanguard added, they're at 18 million shares. BlackRock, 17 million shares. They barely sold any. Hesja Capital Partners. So, I mean, let's just take a peek. This is pretty significant. I do, I, I do not agree with it one bit. Okay, so going all the way back to June 22. Institutional ownership as high as June 22. June of 2022. The year 2022. And apparently my computer is okay, there we go. June. Wow, so that's right here. So institutions, it's at the same levels of when the stock was 390. Yeah, I want to see this get back down to 3-ish, or let's just do dirty charting right there. Sure, why not? 624. I don't know why there's no shorting going on here. There is. There's some shorting. There's some shorting. Okay, let's look at some advanced charting here. I hope it saved my old. It did. Yes. Okay. Um. Oh, it didn't. Drawings. No. Okay. So, it did hit this exact, you can see where I have it stair stepping down. It literally came and hit. I had this at 1466. This candle got as high as 1550. So, absolutely gorgeous. Let's see what we got going on here. I mean, it's just so many cup and handles within a cup and handle. Like this could really take off. Again, I would like to see this get back down into the threes. I don't know how I was measuring these moves, but I mean, it hit it, and I was beyond ecstatic that it actually performed. And what that showed for me is that history repeats for this stock. What I want to see is this stock to create essentially cup and handle within cup and handle within cup and handle. And I think that will happen 2028 to 2030. And the reason I say that, and it's probably going to be more apparent on this chart, we have some wonderful support here. Again, 25, 26, 27. Getting the stock back down to the fours is going to be kind of crucial to seeing this play out of this other wedge. There could be a chance that it does not play out and we see the stock come back down at 520, 580 for our handle. And then we see the cup and handle motion from there. Again, this is not in good standing for a long term or a long frictionless move up. And I say that because the debt is quite substantial and um, their liabilities exceed their assets. So they've got some work to do. Want to see this get back down. Obviously, I do want to see it come back down here and eventually just rip and roar. So we'll have to see how this plays out. Yeah, we'll see how this plays out for sure. This is a hold for me, obviously. I'm not seeing in a I'm not seeing a trifecta of where we have the business, the charts, and the institutions. I'm not seeing a trifecta here. Institutions seem to like this a little bit. The chart is ugly. The business part is also ugly, or mid, in my opinion. Revenues continue to decrease. They're saying EPS next year should be abundant. I'll take that with a grain of salt. So, anyway, that is all I've got for you guys. Consider subscribing if you are not. I appreciate you for spending your time with me. This is my last video of 2024. Excited to talk about my Robinhood account challenge, $25 a week for the last 2 years. So that's coming out in a couple days. Happy New Year. Talk to you soon. Take care. Adios.